Good morning, traders and investors. Welcome to Friday's edition of Benzinga's Pre-Market Info, brought to you by the good people at OptionsHouse. Mighty Joe Young, how you doing today?
Pretty good this morning, Joel. How are you today? How was Lisa's birthday last night?
We
Tell us all about it.
we celebrated at Baco Restaurant and had a very tasty veal chop, and then she had a pasta with eggplant, very good. And Jason was in there celebrating his dad's birthday. He sent us over a cocktail, so that was very nice.
That's
So
right, one of the most densely populated counties in the entire country, and everybody goes to the same restaurant for birthdays.
yeah, I guess so. I guess so. What do you got? What do you got planned for Monday, Joe?
What do I have? Well, probably a lot of pajamas, a lot of HBO Go, some sleeping in for sure.
What's sleeping in for you, Joe?
Probably like 7:30.
Yeah, yeah. Joe's the man. He get here. What times he get here? Like 6 o'clock, and
6.
6 o'clock he starts cranking up the press. It's not like our young intern here comes strolling in at 8 o'clock with sleep in his eyes.
Johnny come lately,
Yeah,
Mr. 8 a.m. over
yeah.
here.
Jesus, it's time for lunch.
You still give people heat for that, Joel. Remember when I was a young
Oh,
buck
yeah.
and you used to give me heat on the trading floor? I'd show up all red-eyed there and miss the open, and you'd say, "Oh, the afternoon shift is here." I remember you always saying that to me.
Well, Dennis,
I'd say, "Ah, it's okay, guys. Y'all go home now. I got it from here."
well, actually, there was one day I almost didn't let you trade because you came in hung over, and I said,
Not me.
Say it ain't so.
I said you don't respect the markets.
Wow.
I was probably a little hungover myself, but
I
Dennis,
had the
you
utmost
heathen.
respect for the
I did,
markets.
I did, and he was shamed.
I respected the markets so much that I actually showed up for work despite that big night that I had the night before.
I thought you were going to say you gave up drinking.
No, that didn't happen. At
we-
least not yet.
We have a bevy of earnings reports here to go over, and we'll just first look at the S&Ps. Just creeping. It's hitting that 1840 level. Just keeps hitting it, hitting it, hitting it. Gosh, can't close above it. Is today the day we just break out into uncharted waters?
I don't know. It's going to be interesting. 1846 is the big number. Obviously, we're 7 points away from here. It is option expiration here today. These days do statistically tend to open a little bit higher at the open. So we'll have to see if that does come into play here today. Obviously, so far in the pre-market, we're up 3 points, so it does appear to be coming into play. But we did have some bad earnings there too, Joel. That's going to knock down. The tech sector could be a little bit weak here because Intel disappointed. It is trading down $1 here this morning. They missed 51 cents versus 52. They did be on the top line, 13.8 billion versus 13.72 billion, but it's not helping the stock. It's trading down at 25.55 right now in the pre-market.
Wasn't the street just going nuts upgrading this thing over the last couple days, Brent? Is that correct? I mean, I thought Morgan Stanley, they goosed this thing. They gave it upgrades,
Yep.
and it.
I remember some upgrades too there. I'm trying to look back at my sheets. Brent, what do you got there? Was there some upgrades there the last few days?
Yeah, I know there was one on Wednesday. I think it
Let's
was.
see
I
what
think it
we
was
got
Morgan. I think
here.
it was Morgan Stanley.
Even my poor memory is remembering this, Brent, so it
We
must
got
have happened.
we got a BMO. We got a JP Morgan. Might be what you're thinking of, Joel.
Okay, I knew there
What
was.
day was JP Morgan?
JP Morgan was the 14th. That was Tuesday, right?
On Tuesday.
And
So that's when it
then-
had to move from like 26 to 26.50.
Yep. And then BMO the following day.
And pumped it from 26.50 up to over 27.
Right.
Fari was right. He was like, this thing's already priced in. It's already got the juice that way. He was looking and leaning to, play this from the short side. Hope he got that trade on there that he was talking about because it is down the dollar here now at 25.52, and he'd probably be in the money because he was looking at selling some outside calls and some outside puts. He was saying to crush the volatility, and
Yeah.
that would have worked in this case because he would have been, well, at least it would have worked so far.
Crush the Vols was the I kind of like
Crush the
that.
balls.
Yeah.
Yeah, I like that too. Crush the balls.
Like the Tennessee Volunteers. I don't like them either. Well, the pre-market chart here is giving you some support. The initial spike down, they walked it down to 25.14. One crazy spike up there to 26.20. I think I'm going to strike that from the chart. But I'm going to use 25.14 as a support level, and then 25.60. Is there somebody out there in the pre-market making a stand there, Dennis? Because over the last hour or so, We keep bumping our head up against that level. Going to the daily chart, see if we can find anything to support that 25. Well, you have to go back to the 20th of December. You had a 25.04 low, then a 25.18 low. So that buyer was out there again. So I think they might have already put the low in for the day here. We just might creep back up, and we need to get to 26.33. Need to rally 80 cents to fill the gap.
Yeah, I don't think the rally's going to happen here today, but we did have support. We got down there to 25 and a quarter on just 5 days ago, which was on the 9th of January. So then again, the whole 25 area probably uses some support too. So lower 25s, there is some support for this issue. I don't think it can take out that. So we're trading. We've got knocked a buck off it here. The numbers weren't like completely destruction. It was, they just slightly missed. So I think they got a lot of this priced in here in the pre-market. And it seems like everybody, buy the dip. That's always the story. The stocks pull back, you buy the dip, you get rewarded. Not sure if that's going to be the case in Intel, but it sure was the case in American Express last night. If you were buying that dip last night, they reported earnings as well. And they appeared to miss. Well adjusted, I guess they came in line. The revenue was light though, 8.5 billion versus 8.55 billion. And the stock really got killed actually on the initial report. But Brent, when you dive deeper into that report, they're trying to tell us now that this report was pretty good. What do you got?
Right, it looks like it was pretty good. So I'm looking at a SunTrust note here saying that a tax rate driven EPS missed mass strong core results. So it looks like that adjustment sort of pushed it to kind of the scary side of things, but doesn't really look like that was actually in the report.
So SunTrust is saying this was a pretty decent report, and there's also a couple other analysts coming out and upgrading the stock here this morning. Susquehanna is coming out and upgrading it. Buckingham Research is upgrading the stock. So some of the analysts are liking this report, despite it looking like it wasn't that great on the from the numbers. Joel, check out the pre-market or the after-hours action last night.
Uh,
Where did the stock get to? Because they crushed it.
yeah, they did. Real quick bar. You got down under $86. You even got to 85.50. I mean, I can't.
Wow, it's down
Yeah.
2 points.
Yeah, and some volume traded there too. I mean, it wasn't like they just knocked it down there in a couple hundred shares. Got a rebound, immediately rebounded to the $88 level, and then I guess people rethought this at the 4 o'clock opening. There, no, around 7 o'clock, just popped up. We just hit $90. That's been the pre-market high, settling in here at $89. So I will just take a look here. Had a nice sell-off. Got the pop up. I like this $90 level. We had a high back there a few days ago. Let's see when we got to 90. We got to 89.93. That was a high in the ninth. I keep an eye on that. I really don't have a feel for a good support level since we went so far down in the pre-market. I guess if it does go all the way down to back to the 87. You have two lows there, 87.08 and 87.26. Double
You
bottom
know,
there to deal
you
with.
know what happens? The bots, the news bots, don't read the story. They don't break down the report. They look at the numbers. The numbers look bad. They whack it. So off that bat, when the stock goes from 87.78 all the way down to 85.50, it's all the news bots just slamming the stock there when it appears that it could be a miss here. And then the devil's in the details. You dive in the report. In this case, maybe the good stuff was in the details because when you start breaking it down, obviously SunTrust saying when you take some adjustments and you do some other stuff with the accounting, this report was pretty good. So now maybe that's why the market reads it and humans rationalize, and the smart humans are maybe buying it down there, and obviously the stock trading higher here now, $1.30 higher.
Any
So
sympathy?
good stuff if you were buying it.
Any sympathy plays here?
Yeah, there usually is. I mean, well, the one sympathy play you could say Capital One Financial, but they reported last night too, so they're not going to have sympathy there. But it often does move with it. I mean, Mastercard and Visa can sometimes move with it a bit too, but they're kind of different. But Capital One Financial is definitely similar, but they also reported $1.45 versus $1.55. So Capital One missed flat out. It is actually trading down at 74.47, which is down $2 right now. Offered at 75 bucks. It traded lots of volume there in the 74 handle last night, so it was looking like it wanted to settle right around the whole 74, 75, 75 area last night. That's where it was trying to price it. We'll have to see if they start moving it further here today. But what are the charts saying on COF?
Cough. This was one. It was building that nice support took that out to $76 level. Got a dip down to all the way down to $74. Got a quick rebound, 75 and a half, just settling in here at the $75 level. Now that 76, which had been really good support, will now act as resistance, coming back on the downside. But this thing had a big run up from 71 here, so I'm not falling in love with this thing on the downside unless you're looking to cover shorts. You did have a low at just under 74 here at 73.61 on the 20th, and haven't quite got there yet in the pre-market, so I'll keep an eye on that as a good support level.
Discover shares are down about 30 cents right now. It might be one of those other sympathy plays there in that sector.
Yeah, DFS actually, it was trading last night. It was trading down a little bit, and actually, I did sell I just sold a couple hundred shares there, actually, and I'm still short it right now. And I'm kind of looking at this, and I'm like, I liked it better when the American Express last night. Both stocks were down. Now you got American Express trading higher, which will put upward pressure on Discover. You got Capital One, which is more related, trading down significantly. So it'll be interesting to see if DFS, opens up or down here. Obviously, the market's coming in here a little bit right now too. We're only up 2 points. We're up 4.5 when we started the show, but we'll keep an eye on Discover. There could be some sympathy play there for sure. Brent, thanks. Morgan Stanley also reported here this morning. I'm going to hand this over right back to you, Brent, because there's lots of adjustments in this number. It does look like on an adjusted basis that they beat 50 versus 46, but they missed on the revenue, 7.8 billion versus 8.03 billion. But there's so many adjustments in this report. Stocks trading 35 cents higher. What's the report look like when you dive into it, Brent?
Yeah, I got like 4 adjustments here. So the gap figure was just for 7 cents. That obviously didn't look good against the 46 cents. If you take out DVA, the adjust figure was 20 cents. And then if you also take out, what was the other expense there? I think it was a litigation expense. That brings the adjusted EPS from continuing operations number to 50 cents. So actually beat by about 4 or 5 cents there.
So all those adjustments, and they make the stock go higher here. It's always interesting. You can report whatever you want, basically, and if you can find the right adjustments, you can make the numbers look good. But in market, price don't lie, I guess. I guess it did off the bat. Does stock get to $31?
Sure did. Yeah,
So
30.
somebody read their initial report, and they're like, sell it. Oh, no, there's a whole bunch of adjustments. Buy it.
30.96 is the low that we hit at 7:30 this morning. Rebounded all the way up to 32.85. Someone has an opinion here at 32.85. Hit that 3 times over the last hour. So keep an eye. I don't think you'll see the 31, and I don't know if you're going to see the 32.85 either. Recent high of the move has been 32.24. We are trading above that, so if you're playing it from the long side here and it dips below 32.24, then look out. And it's funny with the Goldman earnings yesterday. The stock held up okay considering.
Well, the Goldman earnings were good. Like Goldman earnings, like that's the whole thing. When we came in, we looked at that number. The Goldman numbers were 460 versus analyst estimates of 420, and the revenue blew it away too. So they blew away the top, blew away the bottom. We knew Citigroup was going to put a little bit of pressure on the Goldman numbers because Citigroup, missed pretty big. But wow, I can't believe that Goldman just turned that hard, closed near the lows. A 175.17 is trading up a little bit here this morning, but that's concerning when they're whacking stocks on good earnings.
Yeah, Brett and I, we were going over the numbers on that, and I'm like, well, so the stock's done. I'm like, what do you see bad in here? And, he cited that, perhaps the Citigroup numbers, but they're really not. I mean, Goldman and Morgan
Are more related than anything.
Yeah, anything else. As far as the Goldman Sachs goes here, it's trading up a measly 35 cents, so not a big bounce here. 174.50 was yesterday's low, and then you had a couple bottoms at 174 here. So I'm not really interested in this one until at least get a double bottom or something you can lean on. You had 2 lows, 173.75 and 174 back on the 19th and 20th of December.
Your favorite stock reported earnings, General Electric, reported in line this morning here, 53 cents versus 53 cents. So they came in line. The revenue beat a bit, 40.4 billion versus 40.22 billion. When I first came in, this stock was trading quite a bit higher here. I think it was trading up in the mid 27s. How high did it get?
Holy mackerel! Now it's trading down 40 cents.
Now it's down 40 cents,
This
trading
is
down
like a
26.80. This is a big range for
this
GE.
is a derivative. 27.69 was the
Wow.
high off the
Oops.
spike. Only a couple thousand shares traded, and then quite a reversal of fortune here.
Yeah.
Turned around all the way down. We just made a pre-market low here at 26.76. So this thing is traded in a buck range already. Very unusual for GE here, man. What some volatility. Let's look at the recent lows in the move here, and it's been 26.68 and 26.74.
Yep.
That's right where we got, but that support after a buck decline. That support's got to hold. If not, we could be trading under 26.60. You had a couple other lows in December at 26.48 and 26.51. But boy, what turned on this GE, Dennis?
These you got to fade these initial moves. It seems like at least this is the day to fade the initial moves. Obviously, the American Express, the hard sell-off, and now it's up on the day. And you saw Morgan Stanley where it was trading way higher, and it's trying to come in. And General Electric was trading way higher, and now it's totally, not doing well here at all. It seems like it's, I guess, the day to fade the moves. Fading Friday.
Yep. Okay. What else? Who else was?
Lots of other banks, little ones, regionals reporting. Bank of New York, Mellon, BK, they missed. This is a big time miss. 44 cents versus 54 cents. 3.59 billion versus 3.72 billion. So BK is not trading much here in the pre-market, which is typical. It just doesn't usually have much action in the pre-market. It is offered at 33.80, pretty heavy, 4,400 shares. Somebody wants out. Closed at 33.92. Just ticked 100 shares down to 33.46, but it does look like this one is going to open weaker. If you really got down on that one, the 32.80 level, which is quite a bit lower than here. Massive support down there. We had 4 or 5 lows mid-December just in that whole area, 32.80.
Yeah, and if you come back up on the upside here, you had two lows, double bottom 33.79, 33.80. You also had the close right there at 33.92. So with the bad earnings trading down here, look for that area to be pretty darn good resistance. And then, Dennis, you did point out a great number on the downside. We may see that entire area from 32.78 really up to 32.99. That was let's call it 32.74 to 81. That was the area of three lows at the beginning of December on the 11th, 12th, and 13th.
Hey, Dennis, I got a question for you.
Yep.
Is there ever any opportunity for some kind of pair trade between the big banks and the regionals?
They're all related. I
I
mean,
know.
I try to, obviously the relations between the big and the big is going to be bigger than a big and a regional, but they're all related. You'll look a lot of times, and sometimes some of the regionals will lag. You'll see some of the financials very, very strong on a day, and then some of the regionals kind of open flat or open down even, and then they'll get pulled up by it. So they're definitely all related. But I'd rather match a regional with another regional probably, as opposed to doing a big gun JP Morgan and then coming in and trading a BK off of that. But
Gotcha.
there's definitely a high correlation between all the banks.
You know,
So
J Dot's making a good point here. I mean, the banks were leading us higher at the beginning. Actually, the banks were keeping us from tanking at the beginning of the year, and now they're all missing. So what does that foretell for the market here, Dennis? If your leaders,
yeah, we were
yeah,
saying that yesterday too, though. Like the Citigroup numbers were not good, and we were concerned. Well, that's not good, and the market seems to shrug it off. Something's always picking up the slack. I know you wrote that article yesterday. This market is on drugs because literally some of the drug stocks were picking up the slack yesterday. We had with the week report from Citigroup, and some of the banks did bounce back, but a lot of stocks were trading down. A lot of even the retailers were still trading down there yesterday. There was some weakness across the board, but I tell you, the drugs were strong yesterday. You had that Gilead, G-I-L-D, that just took off yesterday, and we were looking at that one, waiting for it. I wish I would have got it. I didn't get it, but broke out through that 75 level and never looked back. You had Eli Lilly, which had just a ridiculous March. This is a 2-day run for Lilly at 3 points. This is a stock that typically moves 50 cents a day. Doesn't usually have a 3-point run, but wow, man, some of these drugs, the money's trying to find a home, and it's moving into some drugs.
yeah, that Lilly move really just just took off, and it's been more than like a 2 day run. I mean, if you look at it,
Yeah, I guess you're right. Yeah.
yeah, trying to bring up the Lily here. This stock has actually had one, two, three, four, five, six, 7 up days in a row. You've climbed from 51.11, that was the close on the 8th, up to 55.30. Can you say overdone?
Yeah, and you're starting to run into some resistance, but we know stuff can just continue to get overdone. So it's so hard to stick your nose out there. You might have thought this was overdone 2 days ago when it got up to 53 because Lilly doesn't usually move 2.5 points in 4 days. So, and if you were saying that yesterday morning and you shorted that open, you were punished and the stock went another 2 points. Yesterday kind of felt like it could be capitulation though, like everybody that wants in is getting in. And we always say capitulation on the downside. You can get it on the upside too. Everybody's like, get me in. I need to be in this Lilly. I've been eyeing this thing. I don't want to miss the boat here. And obviously, the stock really took off, and I couldn't believe that run yesterday. I just kept looking at Lilly. Every time I looked back at it, it was up another 50 cents. It just
What
kept
do you
running.
make of the spike in volume yesterday? We betrayed, boom, 40 million, 50 million, 85 million, and then yesterday, whew, look at that volume. I mean, 8 million, 5 million. Then yesterday you traded 12 million. Kind of a breakout day, huh?
Yeah, it was just it's just gone. And there was some news a couple days ago where they acquired. I think you were pointing this out, Brent, to me, weren't you?
I was, I was. It was
Or
in
was
the
it you,
article.
Joel?
It was in the
They
article.
acquired the CGRP antibody for migraine prevention from Aetos. I
Yeah.
don't even know how you say all their names. Therapeutics. Anyways, they did do an acquisition a couple days ago. Maybe they're just trying to price all that in. I'm not sure, but wow, this is a stock I always felt was this is one. And for full disclosure, this is one of the biggest holdings in my portfolio. Merck and Lilly are two of my biggest holdings. I like that because they've had that Alzheimer's drug there too cooking in the background. I always thought it was a lotto ticket if that thing ever got to market. So I do like this as an investment, but man, it's gone a little bit too far too fast. I agree with you on this one.
Okay. What
So,
else? What else do
but
we
I'm
have?
not fading it. I'll tell you, I'm not fading this move. Not until it puts in a double top or gives you a shot where you got a level here because this has been incredible. We've got lots of other ones. Let's just go back to the earnings just for a quick second here. Schlumberger SLB did report earnings here this morning too. $1.35 versus $1.33. The revenue missed, but it doesn't matter. 11.9 billion versus 12.02 billion. The stock is trading up over a buck right now. 89.79 it just ticked to. Went out at 88.61. It's traded 29,000 shares, but it's coming up on some major resistance at 90.
Oh yeah, multiple highs here. First, let's take a look at what we've done in the pre-market. Pre-market high is confirming that level. 89.80 is the pre-market high. Just give you a quick look at that pre-market chart, but then going into the daily chart here. Look at that. How many highs did you have there around the $90 level? Let me
Big
count.
level.
Yeah, 4 days in a row. You had highs between, what was it, 89, let's see, a little bit higher than 90. 3 days in a row, you had high at 90.11, 90.21, and 90.26. So, boy, keep an eye on that $90 level. Is there any size there, or can't you see? Is it too far away in the book?
I can see there's not much yet. There's 7,600 shares sitting there. It's the only thing that jumps out. It's all like 200, 400 lots in the book. It's really small. So it does jump out, the 7,600 shares, but that's not that much. But who knows?
Okay.
There could be more hiding there too. You
Okay.
don't know if they show the whole order or not. And there could be other institutions that with hidden orders there as well. They did raise the quarterly dividend too, up to 40 cents from 31 and a quarter cents. So that's, good for the value investors in this too. So looks like it's going to test that resistance maybe here this morning. Lots of upgrades and downgrades here. Let's go to a couple interesting ones here. First, I'm going to start with the debacle that it was yesterday. New Skin. Holy cow. We talked about it just a couple days ago, obviously, when I had the big sell off on concerns. And yesterday, that really was capitulation on New Skin yesterday. It got all the way down to 67.51. Brent, do you want to dive into this here again, just on the details on the whole New Skin debacle? We are getting a downgrade this morning from Bank America, which is knocking it down about $2 right now. It went out at 84.80, closed at 83, but it bounced back nicely from those lows that it made in the afternoon after the company was responding to all those claims that the China government was investigating them, and it was kind of just a mess.
I mean, you pretty much covered the updates right there. I mean, there was kind of some updates that came out throughout the day, but they weren't saying a whole lot. I think the one was just that the Nu Skin CEO saying we're absolutely not a pyramid scheme. And something that was kind of funny to me was a lot of the earlier reports were that it was a government inquiry, not an investigation. So a little bit of technical language there. And then when Nu Skin did come out and respond, they said it was an investigation. So that was kind of contradicting some of the earlier reports. Something that I think was notable in the story, besides what was actually happening with Nu Skin, was shares of Herbalife and also USANA got crushed.
Yep.
And these are kind of
HLF.
like, for lack of a better way to say it, these are kind of the pyramid scheme fear plays. Both Herbalife and USANA, probably not warranted, but the both those stocks have just gotten crushed the last 2 days.
Dennis,
HLF and USNA are the symbols on those.
yeah, we'll go to those in a second. But Dennis, what do you make of this pre-market chart here? I mean, unprecedented volatility in the issue, right? You made the low at 67.51, then you've come back up, and for a majority of the after hours and
Done
pre-markets,
nothing.
yeah, you did nothing, and you just bear hugged that $85 level. Now you are
Bank America downgrade, making it drift down here a little bit here in the last hour, but yeah, it's just kind of hanging out.
yeah, yeah. What do you think about that $85 level?
I can't think technically much on any of this because, like we said, this thing's probably going to come out with more headlines today. You can see how much headlines can move this. I mean, yesterday they halt the stock, regulatory halt, break some news. Stock just gets absolutely murdered. It actually halted three more times during the day yesterday on the circuit breakers, which is a whole nother issue because I was actually writing an article on CFA Magazine. I can post that in the chat. I wrote it this month, basically saying when material news breaks on stocks, sometimes the circuit breakers simply aren't wide enough to allow the price to naturally adjust to where it wants to go. And the bottom line here is the circuit breakers work. If you don't know how they work, it's the limit up, limit down circuit breakers. They were put in there basically to stop stocks from having flash crashes. And just to put it simply, it looks at the stock from the last 5 minutes, calculates the mean from the last 5 minutes, and then if the stock moves, and this is for the S&P 500, the Russell 1000, and the top and the bigger companies, if the stock moves more than 5% in the following 5 minutes, it will hit the lower circuit breaker and will halt for 5 minutes. So what happens is that 5% obviously wasn't enough for Nu Skin to adjust. So as it was falling, it would fall 5%, halt. Then it would fall 5%, halt. And it fell another 5%, halt. So, and then actually even on the way back up, I think it was trying to halt. So it's kind of funny when, material news breaks. Those circuit breakers just simply aren't wide enough to allow the price to naturally adjust.
But isn't that really the only time that those circuit breakers are used is when there's like a major material news item? It seems kind
Well,
of
that seems to be when they're being used lately. They put them in there to avoid stuff like the flash crash. Remember, because
yeah.
that
I
just the
remember
stock's
one
going down to zero.
right.
So they're in there so to basically the whole point to it all is to if a stock has a sudden move is to pause the stock for 5 minutes, let cooler heads prevail, let human beings think so computers aren't just throwing the stock everywhere, and then reopen it after 5 minutes where everybody's had time to figure out what the hell's going on. In a lot of cases, sometimes you'll see these things tripped. Sometimes it's just order flow. Sometimes the stock, some of these smaller companies will hit a lower limit up or limit down level, and they'll be halted for the 5 minutes. It's just order flow. Some big institution came and sold the stock. So it's there to reduce volatility, which it does. But I mean, when you're seeing a stock halt three times in a 15-minute period, it becomes annoying and it becomes almost a joke. So I think at certain times when the news is really material, there should be some type of adjustment to let the thing go and let it adjust. So I don't know. There's the jury's out on whether these things are obviously helpful or in some cases they obviously disrupt trading as well.
Just a note here on the Herbalife. If you were out there playing this thing from the short side yesterday or looking at initiate a long, wow, look at that $68 level. We got down to 68, boom, 15 yesterday. Then you had three lows in a row between 67.92, a little bit higher, 68.30, but that's the level to keep an eye on here for Herbalife. If it comes back down there again, it's good support, but longer term, I keep that as a major significant level to see if the run for Carl's over in this one. And there was some breaking news. I'm not too familiar with this stock. KERX reports some favorable news. This thing is taking off here. Let's see,
Another
biopharmaceutical.
The biotechs have just been on fire, man. I tell you, there's so many of these things. Every day we're looking on my leaderboard, and it's usually a couple of biotechs leading the way here. This one's up 8% here, so this one's
Yeah,
moving.
yeah, it's not huge. I mean, it did get a little bit higher. Got to 16.19. We've kind of pulled back a little bit from that level. Looking at it from the dailies, you had a lot of resistance in the higher 14s, 1470, 1480. Broke out from that. So if it comes back down to that area, you can use that as a potential support point. Going out a little bit longer term. See what
I think
this.
this is
Yeah,
highs. I'm going back
yeah,
to the
yeah.
monthlies. You got to go to. You got to go back to like 2007 to find levels.
Oh, really? Okay. All right. Well, then get out of the way. It's breaking out. Biopharmaceutical stock. I'm not gonna.
In the financial crisis, this got down to 10 cents. This was at 10 cents a share.
You're kidding
Now
me.
it's back. It came all the way back to $15. This is one of those. If you bought it at 10 cents a share, you can retire right now. You don't have to even worry about anything.
Yeah,
Wow.
that's one that broke the rule of once you go under 10 bucks or go under $1, you never come back. That's for sure.
There's a
Uh,
lot that broke that rule back in the financial crisis. Or maybe they
yeah,
should rewrite that rule just for the financial crisis.
Fords, right? What did Fords get to?
Yeah, it got down under. Citigroup too got under a buck. I mean, well, and I guess then they did the reverse split, so it's really only $5, but still decent return. Yeah, Ford was under $1, wasn't it? Went to like 97 cents or
Yeah, I
something. Let's
think
go
they were. Did they do a promotion where when you buy a new
go
car,
back
that
and
they
look.
gave you like 100 shares of stock or something like that? Yeah, I remember that. I remember that.
Really?
Yeah, I
I thought you
remember.
were making that up.
No, well, I might have,
Yeah, I
but
remember that too, actually.
That's cool.
I got $1.01, so it didn't quite get under a buck. It got to 101, but it's now $16. So I guess they're going to argue us for pennies there. It didn't get under $1, but wow, that stock's come back
Hey
too.
guys, I got a couple breaking news items. If you look at the S&P futures, kind of ran up into the 8:30 half hour there, and now we're selling off. We did get housing starts. They were, let's see, housing starts better than expected at 999,000, and then building permits, another data point with that 986,000. It was a little worse than expected. Looks like the market's responding to it, but what might be affecting the market right here is UPS is cutting guidance
UPS is cutting
right
guidance.
now, just now at 8:30.
Holy cow, this stock. I've
Yep.
actually had my eye on this one for an investment, but I want it lower. I wanted it in the 80s. I don't know if it's going to get there, but it's down $4 right now. 96.70 after closing 100.49. Wow, what's the guidance look like, Brent?
So they gave a Q4 EPS number of $1.25. The street's all the way up over $1.45, and then for the fiscal year 13, they are now looking around 457. They were previously in the range of 465 to 485. And then let me see, they also gave a growth target for 2014 EPS that was in the range of 10 to 15%. Kind of bouncing. It bounced right at 96. Do you guys see that? Wow.
yep, hit 96, and now we're getting a little bit of a bounce back up to 97.28. So we'll have to see if that's just indeed a spike low here. Looking at, well, we haven't been down here in a long time, Dennis. We haven't been down here since late October, October 29th. We're actually lower than that. We made a low at 96.65 on that day. And then have to go a little bit farther out here. Let's see what we can see, what we can glean on the weeklies here. Boom, boom. Let's see what we can find out.
I tell you, just looking at that chart while you're hunting those numbers down, you always look at those patterns. Look at that head and shoulders, man. You got that whole left shoulder from November to December, and the big run up in the middle and to the end of January, right almost on the button where we got up to 105. Then we formed that right shoulder the rest of the January trading, and now we're taking out the neckline at 100. Not good news. I mean, 100 becomes major resistance now for this, does it not?
Yeah, well, for sure. I mean, also, yesterday's low. Let's see where I mean, we may never see that again. Yesterday's low was 10010. So now, now you have that as a major resistance point. Anybody that didn't sell it in the three figures will be looking to do that. What's kind of scary though is this whole run up that it had, from like the $90 level. Let's see, it just had that straight line between 90 and 100. Just don't like to see that. That's just not a good technical pattern. And you can see now it's going to come right back down through it. And the day, I don't know, I might have to do some reason. Might be speaking out of turn here in class, but a buddy of mine was mentioning that didn't the drivers of UPS and FedEx didn't they unionize not too long ago, become part of the Teamsters? I don't know.
I
I would have to do some research on that. Maybe they're getting labor costs are going up here, and that's going to hurt the bottom line. I will have to do a little bit more research on that. I'll have to email my buddy Ira because his theory is that like the unions and stuff, they like to get you at the worst possible time. And what happened at the holiday season with deliveries and stuff, right? Right? They kind of put the screws to them. But that I don't know if our conspiracy theorists are in here in the chat room today, but I'll just throw that one off the wall. But are we getting a sympathy move here in FedEx, Dennis?
Yes, we are actually. This just ticked down to 138.65. That was a little bit overdone. I think it's now bid 139.29. Offered heavily at 140 though. We got four different guys sitting there lining up at 140 trying to get out. That's where your support was before. So that 140 might become resistance here now. This stock has struggled, FedEx. It's been struggling to get through the whole 145 area. It could not. It's tried multiple times here, looking kind of toppy here too. Man, there's so many charts starting to look. I guess because we've bumped up against
Oh,
this
Dennis.
1845 resistance for so long. A lot of stocks have been looking toppy here.
Oh,
You know, I
Dennis.
don't know.
Bite.
Uh,
Go wash your mouth out with
Bite
soap.
my tongue, eh? Don't
Yeah, you
say
talk.
market look
You
toppy.
talk.
You're not allowed to say stuff like
Oh,
that on
come
the
on.
show.
Not on Benzinga's pre-market info show brought to you by OptionsHouse. You can't talk about the market going down.
Bearishness.
Yeah, you can't do that. You're gonna get fined now. 137.81 is what you hit. You just got to pop on that. So keep an eye on that level. 138 had been your good support level, and just under 138 had a low at 133, 137, 36 and 76. So keep an eye on that pre-market low, and then we'll call the other support area 137.50.
Yeah, overall market kind of flat here now. You do have a couple of your momos trading higher here, and Twitter is one of them. We've got Stifel Nicholas is actually initiating this with a buy this morning, putting a price target of $75 on it. And Twitter here is actually trading up $2.50 here on that news, trading at 63.16 right now. Went out at 60.57, so this whole 60 area continues to hold, and now it looks like it's actually starting to break out again.
This thing is it's just so susceptible to just the upgrades and the downgrades. I mean, that's the only thing this thing moves on.
It is. It moves
It's
3 points every time it gets
That's
an upgrade. And 3
crazy.
points.
It's
Yeah.
absolutely crazy. 63.91 is the high you've hit in the pre-market. Had a big sell-off of that level under to 62.50. I'm just gonna look at this on the dailies here and see what we're coming into. What a air! Nothing but air in this thing. From above 61.75. There's nothing in there up to even get to 66.87. I like to see it come back down and at least test yesterday's high at 62.40 before I'd get too excited. Just too big of a range, and just on an upgrade, it just seems a bit overdone.
I got a couple.
Wait,
I got a couple
yeah.
of points here from the note. The note is titled "Why it is far too early to be focused solely on valuation." With only 232 million users versus Facebook's 1.2 billion, Twitter has years of growth ahead. They're also saying Twitter is an ad platform still in its infancy. Third point, in the U.S., Twitter currently monetizes at a level Facebook did 3 years ago. And then the last point, the IPO was a quarter of the size of Facebook's and much tighter in distribution.
Couple good points there. I just the user thing. I think there's a lot of people that have accounts on Twitter that don't use it a lot. So I argue with that a little bit, but can't argue with the price. If you're on this thing, you're getting a nice pop up, and you're just getting into like a crazy area here where there's really no identifiable resistance levels on the upside. It did form a nice little base though after hitting that $55 area. It had a double top on top of a double top at the 55.50 area and 57 area. So did find nice support. It also had support there in middle December. So technically, it's on the rebound here. I just don't know how far it can go on this upgrade today.
There's some major resistance in its brother-in-law Facebook, though. Look at this whole area. This 58, 58.30 area, it just continues to be resistance. Look at this chart. It's just kind of consolidated here. Despite all the volatility that we've had in Twitter, Facebook is really starting to play in some tight ranges here, Joel. Do you think it's going to ever break out from this 58.30 or break down or just kind of
Wow.
hanging out?
This is unprecedented here. I mean, if you take out the bad day that Monday when it's
When everything sold
when
off.
it slipped down to 55.38. I mean, you basically been trading between the lower 56 area and just over 58 here for the last 6 7 trading sessions. Only got up to 58.02 yesterday. Yeah, I'd like to. This thing is definitely gonna have a breakout here. I think a breakout above 58 in the uncharted waters, or a breakdown below 56. I think I'm more prone here to think this thing's just getting a little tired here, and even if I think people are just taking some off, taking a piece off above 58. But you could get some good action if it breaks below 56.
It seems like every time it gets into the 58 handle,
Yeah.
it gets rejected. But I guess sometime, eventually, if it continues to try it enough times, eventually it does break out. We saw that with the GILD, where it was struggling at that $75 level for 1, 2, 3, 4, 5, 6, 7, 8, for like 14 trading sessions. And then finally, on the 15th try, it took it out. So eventually, if you bang your head up against that, roof up there long enough, you eventually break through it. But we're a ways away from there. The whole resistance really is in the 58.90. That's the upper end of the resistance. So
Yeah.
it's still a buck and a half away from here. So I don't think that's going to come into play
This is
today.
this is the nicest that I don't know how you could say this is the nicest this chart has looked in a while, but it's just giving you a setup here. If you want to put a strangle on a 58 call and 56 put, I mean you have to go out a little bit farther, maybe wait till it gets back to the $57 area, but this thing is going to move away from here, and it's gonna happen soon. I mean, you've had so many days, 1, 2, 3, 4, 5, 6, 7, almost 10 days of consolidation. So very interesting chart. Remind me to keep an eye on this one.
I tend to think it's just a pause for the next move up. I don't know why,
Oh,
but I'm still
okay.
kind of. I look at the Google. Remember Google? We had how many days where it was consolidated under that 1120 area, and we kept thinking, oh, maybe it'll come down and take out 1100. It never did. It was the whole consolidation for the next move up, and now we're 40 points higher than that. Google is up again here this morning. Just nothing can seem to knock the stock down. It's up another 3 points again at 1159.70. Went out at 1156.22. That Google just continues to make all-time highs.
Okay. Well, Dennis, I know you got a lot of options positions on. How many you got on today?
Want me to go take a look and see? I got a lot of lotto tickets. We always talk about those. Let me go see my option portfolio here. Da, 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 da,
How many
da.
how many
I
screens do you?
have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. Looks like 23 option positions I have, with 21 of them going out today. So I was playing some weeklies. I was playing some calls. I got 3 of them are in the money right now. So 3 are working well for me. I got about 4 or 5 that are flirting, and I probably got about 12 that are going to expire worthless. I play that lotto strategy. Usually 4 out of 5 expire worthless, but that 1 out of 5 can make up for the 4 losers. It's kind of like you buy stuff cheap, and you're just trying to play it, just like what Fari was saying, and obviously you can make some big money where you can turn 500-600 bucks into a few grand in a hurry. But obviously most of them expire worthless. So jury's still out on how much money I'm making that strategy in the long run, but short run here I've been playing it pretty hard.
Okay, and just your overall thought on the S&Ps here. We did trade up again, that 1840 level again. Now we've come back. We had some weak data. Any feel up here? Is this just kind of the top of the range again? We hit the last 3 highs have been 42, or that's today, but the last 2 highs 43.75 and 45.75. All time high 46.50. Is the top in?
I don't know, because here's why I think the top is probably not in, is the fact that we keep getting bad news. Citigroup earnings were not good. You had Intel overnight here earnings were not good, stocks down $1, but something is always picking up the slack. Here we are, the S&P futures are up again this morning. If you'd go and tell me, last year, well, Intel's going to miss, and American Express, actually, their earnings weren't that great, although they're saying they are now. Capital One, Morgan Stanley was iffy, GE was going to be down, and the S&P futures are going to be up, I'd say, what are you smoking? But they are, and everything is always seems to be rotating out of whatever they're moving into other stocks, and never rotating out of the stocks altogether. So something's always picking up the slack. The market kind of is telling me it wants to go higher, and I think eventually here, maybe next week, we're going to make new highs here again.
And what anything on the downside, like support level might make you change your
I liked
opinion?
your 33 number from before. Remember we
Yeah.
had that 33 level where it was the top multiple times and then it made a bottom there. I know the overnight low here is 35.5, so it's a couple points away. I think you start getting below 1832, 1831. What was yesterday's low?
3450.
So
Previous
some
days low 3150.
big numbers
Yeah,
there.
we'll keep it
Yeah, that
there.
whole 33 area, I like that. You start breaking down below that, maybe my bull thesis gets put on hold for a little bit.
Okay, all right. Well, we're going to take a quick break. Dennis is going to go tend to his options positions, and I'm going to have Steve Sachs on, head of capital markets at ProShares, and talk about some ETF strategies. So we'll be right back with you. Welcome back, traders and investors. We have a very special guest on today, Steve Sachs, who's head of capital markets at ProShares. Steve, how you doing today?
Good, Joel. Thanks for having me on.
Okay, so we don't have many institutional people on, but before we go into that, let's just give us a little bit of your education and your background in the markets.
Sure, absolutely. So coming up on my 24th year in the investment industry, I've spent the vast majority of my career as an institutional equity and derivatives trader and portfolio manager for various mutual fund and hedge fund firms around the street. So I received my degree in finance from Franklin University in Columbus, Ohio, and studied international relations and economics at The Ohio State University as well.
Okay, we will not hold that against you.
I knew that was coming, though.
Yeah. Okay. So you worked on the institutional side, and a lot of stuff that we talk about is a lot of shorter term trading, swing trading, and things like that. Obviously, institutions can't have to look on a much broader time horizon. So you worked at a few different places. Are they all their method of stock selection? Is it? I mean, we pay a lot of attention to the technicals. Do they pay attention to the technicals, or is it just all fundamentals and crunching the numbers?
No, Joel, really it's a combination, quite honestly. So, if you think about, the institutional money management world, there's certainly a very, very long-term, bent to the stock selection methodology and in the fundamental work, certainly. And really, obviously, that varies amongst, firms and the different styles that they have out there. But if you think about it, in any portfolio construction or the construction of any investment, strategy, you've got, both the portfolio management or construction portion of it, you've got the research portion of it, and then you've got the implementation of the trading, actually, the execution. So, I spent the bulk of my career, implementing portfolios, and it very much is about the short term. It's very much about not only transaction cost management and finding liquidity, but it's about using technicals, and it's about understanding the markets and being able to implement a portfolio efficiently and quickly.
Okay, and I know this is it probably varies with the stock and everything, but I mean it'll take them a long time to get in and out of large positions, right? It would take them. I mean, especially now with the fragmentation in the markets and the pennies and stuff. How long does it take to get in and out of these positions typically?
Well, it really depends on the particular firm and the particular position. So obviously the largest fund managers out there, the top 25 and 50 mutual fund complexes, can spend months entering or exiting, a single stock position. Particularly when you're talking about, mid caps and small caps, where the liquidity in those individual, securities is not great. I mean, it's one of the significant issues in managing portfolios with individual, securities like that, is again finding and sourcing that liquidity and being able to take a large enough position without having undue impact, and being able to manage that process over time. So it varies greatly, but generally speaking, it's, most of them enter it with a fairly significant time frame of understanding it's going to take a while to build that position, and it's going to take a while to exit that position as well.
Okay, and hedging tactics. I know if you've had short hedges on over the last couple of years, it hasn't done much. But I mean, these portfolios, they're long and they're short. But do they try and keep any out of the money puts in their in their hip pocket for catastrophes, or is this like the market just so benign and just such a nice creeper rally that it's just a waste of money to have any kind of hedges on?
No, I think you'd be surprised at the number of institutional managers, as well as, quite honestly, financial advisors that are using risk management and hedging strategies more and more. Even over this past year, where we saw a 30+% rise in the S&P 500, it's interesting, and given the low volatility environment that we've been in for better part of a year, or a little over a year now, I think you'd be surprised at the number of managers that are actually still employing risk management and hedging techniques, and also you'd be surprised at the number of ones that are gravitating towards it. I mean, right, the fact of the matter is that most of us have learned our lesson over the last decade operating in these markets. You've had, obviously, two significant bear markets, within a 10-year period, globally. And it's lessons well learned. So again, most of the folks that we talk to, and certainly from my experience, more and more people are gravitating towards risk management strategies, and obviously using lots of different instruments to do it. And exchange traded funds are really becoming one of the more popular vehicles for hedging strategies.
Okay, Dennis is just popping in here, and he's noticed a trend for more institutional orders going off exchange. Is this a trend that's concerning for you, or do you see it continuing?
I do see it continuing right now. The pendulum is definitely swinging and has been swinging in that area. So if you think about, sort of the progression of market microstructure in this country and globally over the last 10 years, the watershed event really was 2005 with the implementation of Regulation M&S, which was the national market system restructuring that the regulators put in place officially in 2005, but it started before that. So that really has been the driver of all these different aspects of our market structure in this country, and namely the big consequence of that, to your point, has been fragmentation. We've got far more many, venues in which you can execute order flow these days, something in the neighborhood of 70 different types of venues you can execute a particular order in this country now. And what that's led to is ultimately a lot of that execution going, outside of the lit markets into various electronic markets, dark pools, algorithms, things of that nature. So it's not at all surprising. We knew when we went this direction with our market microstructure, that this was certainly one of the byproducts of that. It's concerning to me from the perspective of it just makes it tougher to operate in the markets and to execute order flow, and particularly, for large institutions at times. Don't get me wrong, there's lots of great benefits. It's much faster. You've got a lot of anonymity. But the fact of the matter is that at times it's difficult to gauge liquidity, in single stocks and individual bonds, and find the sources of liquidity.
Okay, got great answer there. So you're big in with ProShares and the ETFs and creating them, implementing, getting them out to the market. How do you figure out what components to put in when you're creating a new ETF? Do you just look for the big cap ones in the industry, or you look for diversity?
Well, we really look at all angles, and first and foremost, it starts with what we're hearing from our investor base, from our client base. So, which again, ProShares is a little bit different in that the vast majority of our client base are financial professionals, they're financial advisors, they're institutional investors, and then they're sophisticated individual investors who are looking for specific tools in order to build better portfolios, either for themselves or for their clients. But ultimately, it starts with what we're hearing from the marketplace, where there's a need, where there's a particular investment strategy or exposure or risk that investors don't have access to. And from there, it really goes about, what's the particular index that we want to follow with the ETF and how that's constructed. So, ultimately, it really boils down to, with the vast majority of our products, the index that's provided by a third-party index provider, and, can we build a portfolio to track that index and make it liquid and tradable and do it in the exchange-traded format. But first and foremost, like I said, it really starts with investor demand. What do they want, or what do they think they need from a investment strategy, or more importantly, a risk management perspective?
Okay, so why should investors use ETFs instead of individual issues? And let's just go over some of the advantages and disadvantages.
Yeah, absolutely. So, first and foremost is we'll tell everybody, they're tools in the toolbox. As my grandfather always says, you don't build a house with just a hammer, right? You got a full box of tools, and that's what ETFs are. The fact of the matter is that many successful investors use a combination of securities and instruments within their portfolios, and exchange-traded funds are simply one of those tools. The advantages that you get, with exchange-traded funds certainly are the transparency relative to mutual funds and actively managed portfolios. ETFs, have obviously a high degree of transparency, and we find investors like to understand what they have in their portfolio, as well as what the methodology is behind the management of that strategy, and that's what you get with an ETF. You obviously also get a great advantage on the tax side. ETFs, generally speaking, are an extremely tax efficient vehicle by their structure. And then the third thing is really what we've just talked about, is liquidity. Liquidity really is the key. Particularly for institutional managers and financial professionals who have struggled to find liquidity in individual securities. Because, right, IBM can't create more shares of IBM on any given day, but exchange-traded funds, through their mechanism for the creation and redemption process and the liquidity of the underlying index and basket in which the ETF is based on, that's the real driver of the liquidity, and thus you've got this much deeper and vaster pool of liquidity in which to source it from. So those are really the key benefits. And then, ultimately, it's just giving the investors, as we talked about, a different tool set, not only for reaching different investment strategies, but also for risk management.
Okay, and the commissions, are they comparable to equities? Are they higher or lower, or where do you come out on the commissions on these ETFs?
Generally speaking, ETF commissions are right in line with equity commissions. In fact, most of the platforms out there charge the same commission for an exchange-traded fund trade as they do for an individual equity. It's very comparable to most of the individual equity commissions that you're going to pay across various platforms.
Okay, and you cover most of the investment options, but I mean, is there ETFs, a lot of ETFs out there for people that are focused on the fixed income sector?
There are, and it's a growing space within the ETF industry. If you look back over the history of the ETF industry, which you have to keep in mind, the industry itself just had its 20th birthday, so we're a young industry. There's obviously been, a lot of growth in the industry, but ultimately, most of that growth had taken place in equity exposures, both, domestically as well as, global indices. Over the last couple of years, particularly the last 5 years, we've seen a very significant increase in the number of strategies that are available through exchange-traded funds. And we at ProShares, have embraced that trend and have really focused on it as well. And in particular, going back to something we talked about a little while ago, with the, our product development process starting with demand and what our client base is telling us they need. Fixed income is a great example. So if you think back over the last couple of years, a lot of money has flowed into fixed income. A lot of people seeking yield in a very, low interest rate environment. That's shifting now, right? We saw a fairly significant rise in interest rates over the course of last year. And one of the things that we were hearing from our investor base was, we need strategies that allow us to continue to hold fixed income and garner that yield, but are protected in a rising rate environment. So several of the things that we focused on last year were in that particular area. Product in particular, ticker is HYHG. It's the ProShares High Yield Interest Rate Hedged ETF. And that's a great example of a fixed income product packaged in an ETF, so it's transparent and liquid and tax efficient, that allows investors to continue to hold a portfolio of high yield bonds and garner that income from them. But it also has a Treasury futures position that's a short Treasury futures position that takes the effective duration of the portfolio down to zero.
Wow. Okay.
So the portfolio itself is not impacted by rising rates. That's the type of fixed income strategy that we're hearing the most demand for, and that, we as a firm are focused on.
Okay, and as far as the risk, are ETFs? There's risk in everything that you do. Is there more risk associated with some of these ETFs? Maybe because they don't trade a lot of volume. How do you view the overall risk in this versus risk in the market?
No, absolutely. It's a great question, and we get that one all the time. And the answer to that question, in its shortest form, is no. The long-winded answer to that is the thing you have to remember is that an ETF really is nothing more than a mutual fund that trades on an exchange. And there are varying structures out there for exchange-traded funds and exchange-traded products. So it really does start with understanding what type of structure the ETF is that you own or about to own, and understanding the ramifications of that. But generally speaking, the exchange-traded funds are really nothing more than a mutual fund that happens to trade on an exchange. So you get all of those protections that you would get inside of any 40 Act mutual fund. And then as far as the liquidity goes, one of the nice things about ETFs, that we talked about earlier, is that liquidity function. And the key to an ETF is its liquidity is really driven by its underlying portfolio. So there's really sort of two sources of liquidity. The on-screen liquidity that, your traders will see when they pull up a quote, but that's really not the driver of the true liquidity. It's really that primary market, that ability for ETFs to issue shares every day and redeem shares every day through the broker-dealer community, or what we call the creation-redemption process. That really drives the overall liquidity of the ETF. So if you pull up a quote on a particular ETF and see that it's only trading 5 or 10,000 shares a day, it really is quite meaningless because the broker-dealer community can easily acquire the underlying basket if it's liquid, exchange that basket for shares of the ETF to the sponsor, and provide that liquidity in the marketplace.
Yeah, because I'm looking at this HYHG here. It traded 22,000 yesterday, then 3,000 and 6,000, 32. So there's not. So as you're looking at it, you're thinking, "Wow, boy, if you want to put a piece on in this, you're going to have a hard time doing it." Do you know what the total outstanding shares are for this contract or for this ETF?
Yeah. So currently in HYHG, the total AUM in the fund is right around 85 million, and that represents effectively a total outstanding shares within the product of about 1.1 million. But again, we can issue more shares on a daily basis or redeem shares on a daily basis, just like you would any open-end mutual fund. The difference is that you can do it throughout the course of the day. And like I said, that broker-dealer community out there has the ability to provide liquidity in this product. So if you think about it from the underlying portfolio perspective, HYHG is a great example. The bond portfolio underlying it is about 130 high-yield bond issues. It's based on the Citigroup high-yield Treasury hedged index, and it really is the top liquidity spectrum of the high-yield bond universe. So not only does the broker-dealer community have a fairly easy ability to source these bonds and deliver them in, they can also simply send us cash in exchange for the ETF shares, and we will go source the underlying bonds and put them in the portfolio. So there's really multiple mechanisms there that allow the broker-dealer community to provide the liquidity. We see on almost a daily basis examples of ETFs, ours as well as others, that may only trade 5 or 10,000 shares a day that will have 50, 60, or 70 million dollars come in, in a single day. We have broad-based index ETFs where it's not unusual for us to see flows of several $100 million in and out of these products in a given day. It's really the beauty of the structure of the ETF and the underlying liquidity the market makers provide.
Okay, so let's say I'm bullish the gold market here, and I don't want exposures to individual equities here. Why would I, purchase a gold ETF versus a mutual fund that, represents gold shares?
Well, it really goes back to what you're looking to accomplish. And, as I sort of tell everybody, that's a great question. You may want to use both instruments. You may want to use one or the other. It ultimately depends on what you're looking for and what you value from a portfolio construction perspective. So particularly as it relates to actively managed funds. So if you've got access to a good actively managed gold fund and you know the manager and you like the methodology which they use and you're willing to sort of give up that transparency of, investing in that particular fund where you're only going to know the holdings every 3 or 6 months, and you have the ability to do your due diligence and do your homework on that particular fund and fund manager, those are always great choices for you. But if you don't have the ability to, spend the time and do the homework, and you want that added sort of protection of transparency and understanding exactly what's in the portfolio, ETFs are generally a great option for those because it gives you, that sort of transparency into the underlying portfolio.
And you have the intraday liquidity and the option. A lot of mutual funds are settled at the end of the day. So if the market crashes and you want to get out, you got to wait for that end of the day settlement. So are there just too many darn ETFs out there? I mean, do you think we need stop creating some and get rid of some, or what direction is this going?
Also a great question, and we get that one a lot, and it's really a question that the industry as a whole is examining, quite regularly right now. But if you think about it, the fact of the matter is that there's something in the neighborhood of 10,000 mutual funds just here in the U.S. alone. And right now we've got about 1,600 ETFs within the sort of U.S., domestic sponsorship, realm. So really when you look at it relative to the other types of investment products out there, particularly mutual funds, there really aren't that many. But again, when you look at it, from the growth of the industry over the first 20 years, you can certainly see where investors would think to themselves, wow, there's just so many choices. How do I know, what to choose, and are these products viable? We've seen quite a few ETFs close over the last few years because of lack of investor interest, just like over the course of the mutual fund industry's history. We see lots of mutual funds come in and go out. In lots of different funds within the hedge fund space, enter the business and exit the business for various reasons. So again, exchange-traded funds are really no different. The reason the question comes up a lot and the reason ETFs get so much attention from all the aspects of the markets is they're new. Like I said, we just passed our 20th birthday in the ETF industry So it's that still the sort of new kid on the block. So we get a lot of attention. The industry gets blamed for a lot of things they shouldn't get blamed for, just like the different instruments that have entered the market over the course of, history, whether it be options or futures, or mutual funds themselves.
Okay, just going back a little bit to the market structure. Are you worried about the market structure with so much volume migrating off exchange? You think we're vulnerable to another flash crash?
Worried is the wrong word. So I do spend a good bit of time myself involved with various industry associations that spend a lot of time focused on market structure. We work with the regulators on a regular basis, and we work with the industry associations on a regular basis. So it's a topic that I'm very, very close to and spend a lot of time on. Worried is the wrong word, but I certainly think that our market structure has issues. We over the last 10 years globally, but certainly in this country, have developed a market structure that is very complex. There are lots of different order types. There are lots of different venues in which investors can execute orders upon. There are lots of issues that we have with technology. So one of the things that you point to is this concern about another flash crash. I'd be lying if I said that it couldn't happen again, because it can. Again, it's a natural byproduct of the market structure in which we have. But I can tell you firsthand that the regulators and the exchanges are very focused on it, as well as the broker-dealer community. And all of us within the industry are working diligently to do as much as we can to prevent those types of things from happening. But it's technology, right? It's a combination of humans and technology. And that combination generally will produce issues, from time to time. But as you take a step back and think about it, even with those types of issues and with the concerns over, market structure, the thing you have to remember is that we have the deepest, most efficient, most liquid capital markets on the planet. And the fact of the matter is that all types of market structures have issues, and it's really basically about trading off those issues and balancing those issues, within your market structure.
And just a few more questions here, and then we'll wrap things up. The futures, the S&P futures, and crude, and a lot of practically all the futures trade practically 24 hours, but yet the equities do not. Do you see that coming in the near future?
I hope I'm retired when that happens. We've been talking about it for a long time, in this industry, from a sort of 24-hour clock perspective. I think we will get there. Quite honestly, from an institutional, trading community perspective, we've had the ability to trade really any instrument, whether it be in a single security or a basket of securities or a derivative, almost 24 hours a day for decades. It's not something that, most individual investors or even the advisor community thinks about. But the fact of the matter is that, using the network of global investment banks and broker-dealers, the institutional investment community has had that ability to trade 24 hours a day for many, many years. Do I think that we're going to get there from a true exchange perspective? I don't know. The seeds are there. The fact of the matter is that, again, from everything we've been talking about from a market microstructure perspective, the technology is there. There's no doubt about that, because the futures market that effectively trades 24 hours a day really was a model and a leader in the sort of use of technology and opening up those markets. I guess ultimately the question boils down to, do we need to? Do we really need to have 24-hour-a-day access to the capital markets, for most individual investors? I would argue strongly that most individuals don't need that access, and even most professional investors don't need necessarily 24-hour-a-day access, right? The fact of the matter is that the fundamental picture on IBM rarely, if ever, changes, from 8 o'clock this morning till 8 o'clock tomorrow morning, right? It's most investors are better off taking a longer term view than that.
Okay, and just to wrap things up, we talked market structure. We've talked about ETFs and mutual funds and stuff. Obviously, you have a lot of market experience here. Uh, I just want to get just kind of your general opinion here on the market. Just a tremendous run here. Seem to be stalling out a little bit this year. Are you seeing any, nervousness, among, the big institutions that we're topping out here? Or is pretty much just full steam ahead in this bull market?
I think there's a little more cautiousness coming into the first of the year than we certainly saw at the end of last year. I think a good bit of the fourth quarter from the institutional investor and professional investor community was a bit of performance chasing, in that the first half of the year and a good bit of the rally, a lot of folks weren't believers, right? They were still sitting on the sidelines. So I think a big part of the push that we saw was not only an improving fundamental picture globally, which is there, there's no doubt about it, but I think that there was some performance chasing going on as well. Keep in mind, I'm very constructive on U.S. equities and international equities in general for this year. I think all the right fundamental factors are there. But what we're seeing from our investor base, again, the financial professional community, is they still want to get exposure. They want to get exposure to equities and fixed income, but they want to do it in a little smarter way. So we talked about HYHG, and we've got another fund, a very similar fund in the ticker IGHG, which is simply the investment grade version of the hedged product. That's the type of strategy in fixed income that people are gravitating towards. I still need my exposure in fixed income, but I think rates are rising because the economy is getting better. I need to protect myself in a rising rate environment. The equity side of the equation, very much the same. Some of the things that we're having the most conversations about and seeing the most activity and flows around are some of our products like ticker CSM, which is the ProShares Large Cap Core Plus ETF. And this is a long-short equity strategy in the large cap equity space. And people are gravitating towards it because they're saying to themselves, I still want to get long equities, particularly U.S. large cap equities. I still want to add to my core position, but I want to do it in a little smarter way. I'm willing to look at smarter beta strategies, long short strategies, alternative strategies in order to reduce the overall risk in my portfolio, but still have exposure to those particular asset classes. And like I said, CSM is a great example of things that people are gravitating towards. And one other I would mention is ticker NOBL, which is the ProShares Aristocrats, S&P Aristocrats ETF. And that's a great example of, people looking at, again, ways to get U.S. equity exposure in a little smarter way. And it's simply based on the S&P Dividend Aristocrats Index, which is an index of S&P 500 companies that have grown dividends for more than 25 years. That's the type of, implementation strategies that we're seeing people use. So is it a little more cautious than the sort of full out 30%, bull rally we saw last year? It is, but they're still pretty bullish in their opinions on U.S. equities.
Great. Okay, we've had Steve Sachs on, head of capital markets at ProShares, giving us a look at the institutional side, the institutional players who really, make up the crux of these markets. Steve, thanks a lot for coming on. We'd certainly like to have you on again, and enjoy your 3-day weekend.
Thank you. You as well. I'd love to come back sometime.
Okay. All right. We're going to switch gears here, go over to Mighty Joe Young with the morning headlines.
You hear that, Joel? He would love to come back on.
Have we had a guest that doesn't want to come back on?
I'm sure I can find one. No, you know what? I think the environment is just hospitable enough that people enjoy. They get comfortable. They want to stick around, and we're cool with that. We got plenty of seats, throw pillows, plenty of cookies. But enough about that. We'll move into today's editorial headlines from around the globe. Technology entrepreneur Cecilia Beatty, the California woman ticketed for driving while wearing Google Glass, had her citation dismissed yesterday by a San Diego court commissioner who said he found no proof the device was operating at the time. Ooh, that stings. The case raised new questions about distracted driving, and Beatty was one of thousands of people testing the device for Google. Google is also now developing smart contact lenses that measure the glucose levels in diabetics' tears. You hear that, Joel? Every time you cry, Google knows.
They know everything except that I bought a new watch.
Well, they must. I mean, Joel, a lot of people who buy watches tend to like to collect watches, so they just want you to buy more, increase your collection, and so on. See what I'm talking about?
I want it off my screen when I go to Chrome. I don't want to see the watch that I already.
Well, then you can either browse incognito or you can clear your cache and get rid of it.
Okay, you'll have to show me how to do that after the show.
If successful, Google's newest venture could help to eliminate one of the most painful and intrusive daily routines of diabetics. People with diabetes have difficulty controlling the level of sugar in their bloodstream, so they need to monitor their glucose levels, typically by stabbing themselves with small pinpricks, swabbing their blood onto test strips, and feeding them into an electronic reader. But you don't do that. You have the pump, right, Joel?
The pump gives me insulin. I still have to.
You still have to test?
Yeah, yep.
Google Smart Contacts could potentially make blood sugar monitoring far less invasive. The prototype contacts are outfitted with tiny wireless chips and glucose sensors sandwiched between two lenses. They are able to measure blood sugar levels once per second, and Google is working on putting LED lights inside the lenses that would flash when those levels are too low or high. The electronics in the lens are so small that they appear to be specks of glitter, Google said. The wireless antenna is thinner than a human hair. Is that of interest to you, man?
Wait, I don't wear contacts.
Well, no, I don't think you would need them as a corrective lens, though, but you could put the contact in and it would monitor your glucose levels without you having to prick your finger.
I mean, I don't wear contacts.
But they could,
I,
okay.
I think it's a great concept. They're making innovations in in the monitoring sugar. I did use a sensor thing that it was very hard to use. So there are ways to do it, and if someone's going to figure out how to do it, it's probably Google.
It's going to be
Google.
Google.
Google's now a biotech stock, right?
Ah, there we go.
That's why it's been going. Yep. Okay.
Okay.
You got that, Dennis? Google's a biotech stock now.
And in other biotech news, Yahoo's editor-in-chief, Jay Singh, has quit the company just one day after CEO Marissa Mayer fired her CEO, Enrique de Castro. Yahoo created... What? COO. Did I say CEO twice? Correction, COO Enrique de Castro. Yahoo created the brand new position of editor-in-chief for Singh, who was poached from his managing editor position at Huffington Post in 2011. Prior to that, he created CNETnews.com in 1996. In addition to announcing de Castro's exit, Meyer's first major hire after taking over the company, an internal memo sent out yesterday to employees also announced restructuring within the company to include the media and editorial unit being taken over by CMO Kathy Savitt. Save it for later.
I knew you were going to say that.
Am I getting that predictable?
In your old age.
At least people know what to expect. The Canadian government has decided Bitcoin is not legal tender in the country, the Wall Street Journal reported on Thursday. Only Canadian banknotes and coins are recognized as legal tender in Canada. Bitcoin digital currency is not legal tender in Canada, a government official said in a statement to the paper. While Canada was ruling that Bitcoin was not valid, the U.S. government was going the other direction, seizing about $28 million worth of Bitcoins from the Silk Road website. 29,655 coins were forfeited as part of a criminal investigation into Silk Road, the U.S. Attorney's Office in Manhattan said in a statement. Morgan Stanley said fourth quarter profit dropped sharply because of a $1.2 billion legal settlement, while revenue climbed on stronger investment banking and stock trading. Income from continuing operations was $192 million, or 7 cents a share, compared with income of $661 million, or 33 cents a share for the same period 1 year ago. The settlement, which resolved litigation and investigations related to mortgage-backed securities, subtracted 40 cents a share from profit. Revenue was $7.8 billion, slightly below the average analyst estimate of $8 billion, according to Thomson Reuters data. United and Continental merged into the world's second largest airline a few years back, but all this time later there are still complications involving labor agreements from when Continental and United were two separate companies. But now 688 flight attendants will soon be out of a job, many of whom live in Chicago. But the union says it doesn't have to be this way and that these flight attendants are willing to make sacrifices such as job sharing and taking as much as a month off without pay a year to help save the company money and to save these jobs. A United Airlines spokesman issued a statement saying, "We have offered opportunities to flight attendants for both voluntary furloughs and job sharing programs in order to mitigate involuntary furloughs, but these programs did not generate enough volunteers and we are faced with the difficult step of furloughing 688 flight attendants. We are disappointed that on 3 occasions the subsidiary United AFA rejected a voluntary crossover program that would have provided flying opportunities to hundreds of flight attendants that may otherwise be involuntarily furloughed." Whew, it's a mouthful. General Motors said on Thursday it will auction the purchase rights for the first 2014 Chevrolet Camaro Z28 available for retail buyers, plus the first 2014 COPO Camaro during Barrett-Jackson Auction Company auctions this weekend in Scottsdale, Arizona. I know what I'm going to be doing this weekend, Joel. I'm going to be watching the Barrett-Jackson auctions.
You're joking.
No, I'm not.
You watch car auctions?
I love that show. In fact, I'll go hang out with my brother, and he and I will watch it together because we're both obsessed with it.
Okay.
There's another one, too. I can't think of what its name is, but if there's an auto auction on TV, you can pretty much bet that I'll be watching it. The Detroit automaker said the COPO Camaro, a race car with serial number 1 out of just 69 that will be built, will be auctioned on Friday night. Fox Business News will carry the auction live. See that? You can watch it on Fox, Joel. GM said proceeds will benefit the Achilles Freedom Team of Wounded Veterans, a group that helps wounded veterans take part in marathons. On Saturday, Chevy's fastest yet on the track, Camaro Z28, with vehicle identification number ending in 0001, will be auctioned to benefit Cornerstone schools in Detroit. The National Geographic Channel will broadcast that auction, General Motors said. People interested in bidding can submit them at the auction or online at www.barrett/jackson.com. Nintendo is doing some soul searching after cutting forecasted sales of its new Wii U gaming system by almost 70%, forcing the company to radically reassess its strategy in a changing gaming industry. The company's president, Satoru Iwata, told reporters Friday there would be a major management shakeup at the company, but that he would not resign, Reuters reports. He also promised the company is thinking about a new business structure. Given the expansion of smart devices, we are naturally studying how smart devices can be used to grow the game player business, he said. It's not as simple as enabling Mario to move on a smartphone. We failed to reach our target for hardware sales during year-end when revenues are the highest, he said. Time magazine says White Castle's small square sliders are the most influential burger of all time. The magazine notes the now iconic square patty that debuted in 1921 in Wichita, Kansas, was the first burger to spawn a fast food empire. White Castle has been based in Columbus since 1934.
Do you like White Castle burgers?
It's been, I can't even remember, it's probably been a decade since I've had one.
I'm a big burger guy, and I hate them.
Oh, you are a big burger guy?
Yeah.
So did you hear about the Thrillist post for the best burgers in Detroit yesterday?
No.
The best burger in Detroit, according to Thrillist, is at a restaurant near Eastern Market called Cutter's. If you're ever down in Eastern Market, you have to go to Cutter's. It is the best burger in town. I can speak from experience. It's one of my brother lives downtown. It's one of he introduced it to me, and I think about it all the time.
Okay, that's where we're going for lunch today.
I really do. So today's trivia tidbit: on this day in 1984, 8 years after it began, the court battle over the legality of video cassette recorder VCR and its allegedly detrimental effect on the motion picture industry comes to an end with the U.S. Supreme Court's ruling in Universal versus Sony. The case marked the Hollywood establishment's first response to the revolutionary development of home video technology. After a development process initiated by its innovative founder, Akio Morita, Sony introduced its affordable Betamax videotape recorder to the U.S. market in 1976. In its defense, Sony claimed that consumers had the absolute right to record programs at home for private use. The company compared the VCR to the audio cassette recorder introduced in the late 1960s. Annual VCR sales had increased from 30,000 in 1976 to 1.4 million in 1981. At that same time period, Sony had also lost its lead in the video recording marketplace to a rival company, Matsushita, and its competing video home system or VHS format, which had improved on the Betamax formula by making the recording time of the tapes far longer, if of lower quality. By 1986, 50% of American homes had VCRs, and the sales of movies on video cassettes were greater than the annual theater box office haul. In the end, though Disney lost the lawsuit, new management, led by the young Michael Eisner, hired just months after the verdict was in, spearheaded the release of classic Disney movies on videotape. Within a decade, 7 of these had entered the list of top 10 best-selling videos of all time, and Disney had an entirely new stream of profits. And today's trivia question. Everyone, on
Ready.
your mark. What was the first VHS movie?
Wow, that's a great one.
The first VHS movie.
Holy cow, this is tough. First.
Do, do,
So
was-
1984 was the
Well, the movie
was
could
the
have been
case.
before.
Yeah. It's got to be something classic, right?
Was it a Disney movie?
No. Do 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 dom.
Anybody in the chat room here
Um,
for 2 free weeks of Benzinga Pro? All right, Joe, we get
All
it.
right. The first VHS movie, the first theatrical film ever released to the public on VHS, was the South Korean drama The Young Teacher in 1976. That is not a pornographic film. The American home video market was essentially born in 1977, courtesy of an audio video firm called Magnetic Video. At the time, 20th Century Fox was a company struggling through dire financial straits. Hey, good one. Dire financial straits. I like that. Magnetic's founder Andre Blade took advantage of these circumstances, paying Fox for the home video licensing rights to 50 of the studio's films. The first 3 American flicks released on VHS were The Sound of Music, Patton, and MASH, at an average retail cost of $50 to $70 apiece. That wraps it up for today's editorial headlines and Tivia Tridbit. Just a reminder, ladies and gentlemen, that the show would not be possible without our dear friends at OptionsHouse, that will give you 150 commission-free trades just for signing up for an account through this page. There's buttons at the top, at the bottom right. Go ahead and make a click, open an OptionsHouse account, get 150 commission-free trades just because you listened to Benzinga's pre-market info. I'm going to hand it over to Brent here now, who's going to carry us since the market's just open.
Ding 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 ding. I like when you call it make a click, Joe. It's a good one.
I like saying make clicky poos.
Maybe not. I don't know if I like that one quite
No?
as much, but it's not to say I don't hate it. So we're open. We are open for trade. Normally I hit you with a couple of the top upgrades, downgrades, but I don't know. I think I'm just going to skip that for today and just kind of give you a quick preview for next week. We are officially, I'm going to say it, we are officially in the heart of the earnings season. Next week, heads up for earnings out of J&J, eBay, Netflix, AMD, United Technologies, Western Digital, Verizon Wireless. Woo! Had to take a break there. Brinker International, that is ticker EAT. F5 Networks, SanDisk, Halliburton, Forest Labs, Delta Air, US Bancorp, Abbott Labs, St. Jude, and Stryker rounding out the healthcare sector. Ton of earnings next week, and it's only going to heat up the week after. Remember, folks, we do have a market holiday on Monday. Woohoo! MLK Day. Thanks, MLK, for that. So, actually, next week is going to be a pretty light econ week. Really, the first data point that we're going to get next week is going to be on Wednesday, and that is going to be the MBA mortgage applications. That's a weekly report, so maybe a little less important than some of the monthly ones. And then on Thursday, we're going to get jobless claims. We're going to get house price index. We're also going to get existing home sales. That's pretty much your econ for the next week. So it's going to be a very micro company-based, focused, I didn't say that right. It's going to be very focused on individual stocks next week. Let me just put it that way.
And there'll be sparks flying from you and Jake's
Oh, yeah.
keyboard.
You better believe that.
After you should see these guys; they're amazing in those earnings, and they're banging them out in those headlines. It's you gotta get out of the way, but do an amazing job.
Don't
on
get
that.
in the way.
Yeah,
Definitely.
exactly.
Maybe I should just highlight for all the users out there that don't get involved in the chat. We do have a great little chat app here. If you scroll down past the screen share where Joel is coming up with all those charts, showing you the important points, scroll down past that. There's gonna be a little login pop up. You log in there, and you're gonna get into this chat. We got quite the little community in the chat growing. I like this a lot. Get a little engagement, can throw out a ticker, throw out whatever kind of issue you want to look at. Actually, JDot was asking about some risk reward a little bit earlier yesterday, and we didn't quite
Yeah,
have
we
enough
kind of
time
yeah.
to get to that. So I was gonna say maybe we can. You want to schedule it for Monday?
Yeah, well, I could just talk to a little bit about it, and we can go into more depth on it on Monday. It's
Great.
just when you're doing these trades. I mean, no matter what the stock is or future or whatever, risk reward ratios are, what I'm talking about is just basically a 2-to-1 risk reward ratio. If you're trading a stock, like let's just give GE for an example. If you're shorting that off the open, you got a 20-cent target on your trade. Well, you can't risk more than 10 cents. I mean, because you need, need to be able to have, your winning trades. You're going to have less winning trades than you do. You're going to have less winning trades than you do losing trades. And if you employ good risk reward ratios and whatever you're trading, you can have a lot of losers, a lot of losers, a lot of losers, and then boom, you can make up with it with the good winners. So sorry you have to work on Monday, J Dot. So we'll pass it on to Tuesday, and
Yeah,
we'll
good
get it
point.
back to you. But he also asked about this stock RD.S,
Okay.
and let's see if I can get it on here. Pull it up on this chart. I was looking at this thing, and it really has a history of let me see if I can get the correct symbol in here. You put it in there a while ago, RDS.B. It just seems like it has these moves up, and then it just hangs out, and then it drops, has a big drop, and then just comes back. And I'm just going back over the last couple months. I don't know if the stock pays like a huge dividend or something.
It's pretty fat, over 5%.
Okay. Okay. So I don't know. Maybe I'd look at the dividend patterns in this thing, because it looks like it. I know there was a big drop at the. Well, this too much to say it's dividend, because that only happens every couple months. I just say from a long-term perspective here, this $74 level looks like good support. If it breaks down through 74, you could quickly find this thing trading at $72. Let's take a look at some of the movers that we had talked about. Intel, all the analysts got it wrong, upgrading this going into to earnings. They disappoint. Trading quite a bit lower here, $1.06 lower. Opened up at 25.36, and it only ticked another 7 cents lower in the pre-market trading. It got lower than that here. Let me see how low Intel got in the pre-market. Yeah, it got all the way down on the initial news. I got down to the $25 level here. Got down to 25.14. Haven't traded that low in the pre-market here. It kind of looks like this thing is just basing a little bit. Perhaps the sun's over and we'll just creep higher for the remainder of the day. Once again, looking at that first 15 minutes of trading here to see if that low holds up.
Joel, I think I'm gonna have Jake roll over here for just a few minutes.
Good.
But while Jake's kind of getting in position, we had a user a little bit earlier asking about GALT. I wanted to make sure you were gonna take a look at that one before we got too far into the movers.
Okay.
This one's Galactin Therapeutics.
Yeah, and this one had a sympathy move with the Intercept. Intercept is come back down to reality. GALT has come back down as well, but seems to be a little bit more solid here from a chart basis here. Just kind of hanging out here at the $13 level. Had a $1.20 range yesterday. I guess like to see it wiggle around this 13 for a little bit, and if it's aiming to go back up to that $16 area, you got to hang above 13 here. If not, if you can't maintain the close above that $13 level here, I think it just might sink back down as well. Minor support at 11.75, but well, those I'm sorry. 1201 was your low yesterday. So 12 to 13's been the range. Let's see if it can get above 13 and hold.
Well, Joel, I've decided to hop on air now. Looks like
Good.
we're getting into the morning movers. I want to hop into some of the companies that reported earnings this morning and after the close yesterday. I'll do a quick run through. You can pick which ones you want to go after. But we
Okay.
did have Morgan Stanley this morning. EPS came in at 20 cents versus the 46-cent estimate. It's a big miss there. Revenues coming in at 7.8 billion versus expected 8.03 billion. We had General Electric coming in line on the bottom line, 53 cents, exactly as expected. Revenues beat ever so slightly, 40.4 billion versus expected 40.22 billion. We also had SunTrust this morning, 77 cents versus expected 69 cents. Revenues coming in at 2.06 billion versus expected 2.03 billion. So SunTrust beating on the bottom and top line. And Schlumberger this morning, EPS coming in at $1.35, beating the expectation of $1.33. Revenues coming in at 11.91 billion versus expected 12.02 billion. Well, I guess we'll get Comerica in there too. Why not? Former Michigan headquartered company here. EPS of 77 cents was expected 74 cents. So it looks like they pulled out a beat there. And then we had that Intel miss after the close yesterday. So lots of interesting earnings right now. We're not in the highest volume period yet, but we are getting to that area where we're getting a lot of significant names reporting. So keep an eye on all these earnings reports. So Joel, we did have Intel missing after the close yesterday. We had a big movement on that. It's dragging AMD down with it. What do you think of Intel here? It's India, November, Tango, Charlie for anyone following along on their own charts.
It had a big run up into it, and the disappoint, they brought it back down here. But it has not taken out the pre-market low. Intraday low 25.29, open 25.36 here. So I just think you got a lot of people that got caught between 25.5 and 27 and change on the short side. Reevaluating here, a little bit of a gift for the issue being back down at 25.40. So just looking for a slow drift up here. Man, I'm just really, I have to admit, I'm surprised here with this Morgan Stanley move. I know they made a lot of adjustments here, but this stock is off to the races here, trading above 33. And I'm going to have to think here, when's the last time the stock has been at this level? And you need to go back to the financial crisis here and to find out last time Morgan Stanley has traded at this level. Making a high in the session right now at 33.11. I know I'm going to have to go to the monthlies here, expand my chart out, and if you need to go back to 2010. And in 2010, hey, I got a level for you, folks. If you're long Morgan Stanley, back in January 2010, it made a high at 33.27. We're only 26 cents away from there. Keep it that as a level. And then, did we talk about Schlumberger at all?
You know what? We haven't dove into that one yet, but the Schlumberger did report this morning.
Right, and had a couple bumps in the pre-market up against the $90 level. Let's look at the pre-market trading here. As you can tell, try to get through 90, and then also during the regular session, you opened right up at that area, and then you pulled back. So those three highs there forming some resistance so far in today's session. If you can clear 90 here, you can have a nice breakout to the upside.
Another name I want to look into is an American Express, Alpha X-Ray Papa. They reported after the close yesterday, $1.25, which was right in line, 8.5 billion versus expected 8.55 billion. This is kind of like a different kind of financial here, but definitely follows along the same lines, more on the consumer financial side. So definitely something interesting to look at here. With their reports, you can really kind of track the health of the consumer. Now, Joel, a lot of these credit card companies, as a lot of people know them, have been really high flyers recently. What do you think of American Express here? And we can even go out farther and take a look at MasterCard and a few of the other names in the space. What do you think of American Express?
You got to pay your bill on time, man. they'll nail you, man.
Yeah, they will.
I mean, you got to pay all your bills on time, but that American Express, when that comes in the mailbox, I'm like, I cut the check, man.
Top of the list.
Yeah. Looking at this, this is a new all-time high for the stock. Just an uncharted territory here. Not much to say except you made a 92.48 high. Really a crazy move in the pre-market trading. They initially did not like the report, took it down under 86. now a $10 range. I mean, I guess if you have the saying and you're holding on here, maybe just put a protective stop at this gap area because you do have a $2 gap between 90.55 and 88.24. Had not looked at see. I mean, they're kind of related, but they're a little bit different. Shares of Visa. Let's see if it's right. Having a little problems getting the symbol up here. Visa making a move today in trading. Let's see what Visa's doing. Coming up against some resistance here. Not rallying as much. Yesterday's high we haven't been able to see yet, 223.76, but we'll keep an eye. We're only 50 cents away from there. Just going back, I just was looking at a sympathy. I mean, Goldman, good earnings, man, and they punished the thing yesterday. If you were just wanted just a key level, and I don't think it's going to come back down there. It's $2 away, but match yesterday's low to the tick at 174.50. So if you're looking to put a little bit of a swing trade on in Goldman Sachs, there you got a nice stop out point or a nice level of support.
Now, Joel, something else I want to take you to take a look at real quick is it's following along on the Intel earnings, and it's AMD, Advanced Micro Devices, Alpha Mike Delta. They were trading down this morning on the Intel report. Obviously companies are peers in the industry. When you have Intel missing, they're kind of seen as the best in breed in that space. So, a lot of AMD traders were kind of knocking it down this morning. What are you thinking on Advanced Micro Devices here? We're down almost 5% here, maybe even looking at that $4 level once again. Any thoughts here?
Poor AMD. There's always something with them. They rally up here. We talked about was it earlier in the week or was it late last week? We had talked about the major resistance at 425, 426 level, and it broke out through there, got all the way to 460. Pull back. I don't know. I kind of watched the Intel here today. I think they're whacking this pretty good on the Intel numbers, but you did open into an area of 3-4 lows between 405 and 409. Made a low at 411. So I mean, if it does come back down and tread, in the lower fours, I think you're gonna see some buyers there. I mean, just people also have been shorting it over the last couple days. I don't think it's gonna crack 4 today.
Well, Joel, believe it or not, looks like we're towards the end of the show and towards the end of this week. Just a heads up to all of our listeners, Monday is a trading holiday, so we will not be on air. But any final thoughts on the S&Ps here? We are down on the S&Ps, up on the Dow, down on the NASDAQ, gold is up, crude is up, and the euro US dollar is down.
S&Ps are struggling here to get back to the 1840 level. Current high 1839, over our pre-market high 1842.75. I mean, yeah, the markets will be closed, but I'll be watching the SPOOs on Sunday night and Monday because a lot of times you can get some big moves, reactions overseas and stuff. So things that are going on. So not everyone will be taking the day off, but glad you all could join us today. Have a great 3-day weekend, and we'll be back with you on Tuesday.